Amin Nasser, CEO of Saudi Aramco, thank you very much for joining us on Bloomberg Television. It's a real pleasure to be here. I mean, we overcame quite a few obstacles to come out, including harsh weather. So I'm glad we're finally seated and suited and ready to go. Let's kick off with the Iktiva, which is the major event that is about to kick off here. You're looking to deepen the manufacturing base. What specific achievements can you already point to as part of the program?
Thank you, Yousef, and you called it a harsh weather. It's beautiful weather, by the way, for us, and we are enjoying it. I think for Iktiva and Kingdom Total Value Add, it's a program that we started in 2015, so we are getting into the fourth year now. When we started, our local content of our procurement supply chain procurement was around 34%. Today, we are more than 50% in local content. Basically, the intention of our Iktiva program is to localize our supply chain, mainly to optimize our cost, increase our reliability as a company, and at the same time, create more jobs and industries in the kingdom close to our operation.
Mm-hmm. And have you already made significant progress in any of these areas? I mean, what would you say has been a success in the Iktiva program?
Well, localizing a lot of the procurement is happening. Our target is to be 70% local content by the end of 2021. Just moving from 34% to more than 50% in local content in the kingdom is quite an achievement by itself. I see that we are progressing well toward our target of achieving 70%. If you look at what is happening in the kingdom, a lot of the industries that is working with Saudi Aramco is moving their plants, services to the kingdom, closer to our operation. The intention is not only to serve Saudi Aramco, the intention is creating hubs to serve Saudi Aramco and the region. As you know, 70% of the oil and gas reserves is in this region, and there is a lot of requirement for these materials and services within this area.
We're seeing more signs that the global economy is slowing down, and we understand that there is less demand for your barrels as well. How do you see this playing out into 2019?
Well, we always look at the long term. We never plan based on a short term. And so far, in our view, the demand is healthy. We're looking at between 1.3 and 1.4 this year of additional demand. Next year will be also the same in terms of additional demand. We are crossing the 100 million barrels. So there is a lot of healthy demand in our industry. We're not looking only at oil, we're looking also at gas and LNG, at chemicals. So there is a lot of growth potential for Saudi Aramco as we are trying to balance our upstream and downstream. So a lot of growth potential for Saudi Aramco.
So you don't see any signs of weakness at the moment, despite some of the data suggesting that there is?
No, we expecting there will continue to be a healthy demand in the future, mainly because, as I said, you have to look at the oil sectors. So there is a healthy demand of 1.3 to 1.4 million barrels in crude. There is a healthy demand for gas. And there is a healthy demand for chemicals, which is growing at more than 3%. And if you look at the growth in demand in chemicals, basically between now and 2030, 1/3 of the increase in demand in crude will be for chemicals. And between 2030 and 2050, almost 50% of the growth will be for chemicals. So there is a huge potential for growth. The feedstock that is from now until 2050 in the chemical sector for liquid will increase by 7 million barrels, reaching almost 20 million barrels of feedstock, liquid feedstock to the chemical industry by 2050.
Yeah. Let's talk about one of the projects you're very excited about, the acquisition of the stake in Sabic. It's likely to be the biggest acquisition of its kind in the history of the Kingdom of Saudi Arabia. You're considering a wide range of financing options. We understand that much, including a bond issuance possibly. When would you like to make a decision on the financing?
Well, we are in the middle of negotiating now and doing the due diligence with the Public Investment Fund, who own 70% of the stock in Sabic. So it's a process that is currently ongoing. As soon as we complete the negotiation with the Public Investment Fund, and we hope that will happen soon, we can progress to the next step, which is getting the antitrust requirements in different countries. As you know, there is an antitrust requirement before we can close, and that would also require certain times for it to close.
Would you say that a syndicated loan might make most sense given the market conditions at the moment?
Well, we are looking at all options. All financial instruments are on the table, and we are keeping our options to look at what is the best in the best interest of Saudi Aramco.
Let me run you through a theory that's sort of making the rounds with some of the key analysts. You've got the acquisition of this stake, which makes perfect sense from a business perspective. You sort of beef up your downstream ambitions. Does that make a downstream only listing, a possibility?
I think we're looking at a company that is more integrated has much more value than a company that is not integrated. What we are looking at in Saudi Aramco, I'll go back to why we decided for the acquisition. Chemical, as I mentioned earlier, is growing at a healthy percentage every year. Actually, more than transport sector and more than aviation and shipping. So there is a healthy growth in chemicals. And as such, we are looking at integrating more in our refining asset. We are looking at shifting, as part of our strategy, 2 million to 3 million barrels of crude to chemicals. And for that, we need a major acquisition for us to be in different markets quickly. As you know, Sabic has almost is present. It's a very strong company, very well run. It's present in more than 50 countries. So it makes sense for us to acquire a company the size of Sabic for us to meet our goal of shifting 2 to 3 million and integrate more down the value chain in our refining asset in different parts of the world.
So is a downstream listing then a possibility? No. Only because the folks at Bloomberg Intelligence put out an estimate, and they say it could be worth about $74 billion, which would make it the second largest downstream unit in the world.
Well, at this stage, we're looking at integration more than anything else. As I said, a company that is both upstream and downstream with more integration would be worth much more. Integration will add value. It will be very difficult to separate the two because they go together. If you look at any refining asset today, what are we doing today? If you look at our asset with Total in Sator, in Jubail, 400,000 barrels, 440,000 barrels refining. What did we do just recently? We are putting almost $10 billion to expand into petrochemical. The same asset. If you look at our Motifa assets, which is basically a refinery in the US, we are basically putting also $10 million to integrate more into petrochemical. So basically, you're looking at all of these assets when we look at our crude oil to chemical, basically you're looking at more integration. So a company that have more both upstream and downstream will be able to balance the volatility in the market. So you need to have both. You cannot have one only upstream or downstream, because the market volatility will be you can absorb the impact of market volatility when you are balanced between upstream and downstream. And this is where our strategy is going. Basically, we are expanding in the downstream in order when there is a market dip,
you have a little bit of a buffer.
You have a buffer with your downstream assets, and vice versa. When there is an issue with the downstream, your upstream will carry the load. That's why it makes sense for more integration.
There's a bit of skepticism among investors, to say the least, about your IPO ambitions, because it's been delayed a couple of times now. 2020, 2021, is that date now firm? Or could it happen sooner if the Sabic transaction closes?
Oh, first of all, as His Royal Highness, the Crown Prince, Prince Mohammed, highlighted earlier, that we are committed for the IPO. His Excellency, the Minister of Energy, Industry and Mineral Resources also said that we are committed to the IPO. So the government is committed for the IPO, for sure. It is about timing. Now, the talk before, the discussion before that, the IPO would have happened.
Second half of 18, right?
The second half of 2018. In the first half of 2018, we talked about acquisition of major stake in Sabic through a public investment fund. And these two cannot go concurrently. You cannot list while you are going through a major acquisition. The acquisition makes a lot of sense for us, and we need to do it right now because we put a strategy of shifting 2 million to 3 million barrels of crude to chemicals. And the investment plan is there for that shift. For that, you need a major acquisition. You need to do it sooner than later. When the opportunity came through the BIF for the strategic shares in Sabic, we elected to proceed with that acquisition as soon as possible. And for that to take place before you can list, you need to complete the acquisition, get the antitrust, reflect the Sabic deal on your balance sheet, and that we should take also some time before you can go to the market and list Saudi Aramco.
So 2020, 2021, which of the two?
Well, I think there is a lot of talk now about 2021, and I think the government will decide based on multiple options and the market conditions at that time. They keep their options open, but they talked about 2021.
But would you agree that it's actually a good thing that you don't have to IPO now, given market conditions? I mean, yes, the Sabic deal makes sense, but it's also convenient.
The commitment for the IPO in 2018 was there. And look at what the government did. The government changed the tax law. We signed a new concession agreement. We made Saudi Aramco a joint stock company effective January this year. We certified our reserves, both oil and gas. We changed bylaws of Saudi Aramco. We created an investment relation admin area in Saudi Aramco. We started reporting in our financial in a quarterly basis as a company, and as we reported to our board. A lot of things happened, facilitated by the government and by the company. And this took a lot of time. There's a lot of efforts invested to list Saudi Aramco. So the commitment, as I said, is there for sure, 100%. The issue is when this opportunity came through about Sabic through the BIF and the company ambition to, as I said, to shift to push downstream and also to shift 2 million to 3 million. So when we talk about 2 million crude to chemical, we're talking a huge investment that the company is going to be taking over the next 10 years for that shift to happen. So Sabic acquisition had to happen, and we are hoping that the negotiation and the due diligence will be completed soon so that we can complete the acquisition.
The kingdom has taken a lot of steps to bring in foreign investors. The recent murder of Gamal Khashoggi has dampened investor sentiment. What is your message to foreign investors?
Well, I think there is a lot of investment that is coming into the kingdom. During the FII, we signed $34 billion worth of investment with our partners. Tomorrow you will be attending our in-kingdom total value add Iktiva program forum. And we are signing more than 30 deals worth $27 billion. So if you put the two together in less than 2 months, more than $60 billion of agreement and investment that were signed between us and our partners. So there is a lot of growth opportunity. As I said, our strategy in terms of growth, it's not restricted to oil. Well, huge investment in gas. We have huge investment in international gas that is, we're looking at now a lot of deals. And at the same time, the chemical strategy for the company, shifting a lot of our crude to petrochemical and integration require also a lot of investment. And we look at, as I said, the long term. If you look at what happened in 2015 with the drop in oil prices, we continue to invest because we found a lot of opportunity for growth, a lot of potential, and we continue to grow.
So you're not worried about any longer term damage from the murder of the journalist?
You will see tomorrow, hopefully through In Kingdom Total Value Add, more than 3,000 participants, more than 150 CEOs from In Kingdom and out of Kingdom, 80 CEO from out of Saudi Arabia, out of Kingdom. And as I said, we will be signing close to 33 MOUs with $27 billion, with us just signing, as I said, $34 billion less than 2 months ago.
Speaking of some of the ambitions that you have, you're slating about $300 billion in Capex over the next 10 years. Is that number about right? How do you want to split between downstream and upstream? What is the priority? Is it 60-40, 70-30?
Well, we do have investment close to $500 billion over the next 10 years. And if you look at our gas investment, which is receiving a lot of attention, you're looking at $160 billion. If you look at chemical, which is crude to chemical and integration in our refining, with more of the feed going into petrochemical, you're looking at more than $100 billion. That is not including acquisition. And the rest is for oil and other liquids and other projects within the company. So there is a lot of, it is distributed depending on the sector.
I want to just pick up on your refining ambitions, because this is critical, obviously, to what you want to do in the longer term. How quickly can you ramp up your refining abilities? Refining? Yes, yeah. In terms of your downstream capacity, how quickly can you ramp that up?
It is at that capacity, and it is ramped up right now. We always put our refinery at maximum utilization.
But in terms of like increasing that, right? Because you want to increase as well.
Well, you are talking about bringing new projects.
Correct, yes, to grow that.
We are currently at, when you look at our participated refining capacity is 5 million barrels. In our investment plan over the next 10 years, we are talking about 8 to 10 million barrels of refining capacity. So right now, today, we have a number of projects in China. We are looking at 2 major projects for about 800,000 barrels. Some of it is under construction. Some of it is a grassroots. That will take approximately 5 to 6 years. In India, we're looking at grassroots investment with ADNOC and our Indian partners for 1.2 million barrels. That will also take, I would say, until 2025 to have it completed. So depending if you are talking about an upgrade or an acquisition of an existing assets, for a grassroots, you are talking about 5 to 6 years. For an existing assets, it depends on the negotiation that we are doing with our partner. For example, Petronas, they had an asset for 300,000 barrels. It was close to completion. 1 year before completion, we joined as a JV. It is commissioning right now. The facility is under commissioning right now and doing very well at 300,000 barrels. So it depends at what stage we enter. We are confident over the next 10 years, we will be between 8 and 10 million barrels in terms of refining capacity.
Some closing thoughts on the United States. I know it's been an important market for you. You've got the shale industry, which continues to show strength. Next year, there's the expectation that quite a bit more oil is going to come out of the US. They're going to be able to remove some bottlenecks. They're going to add some new pipelines. How do you look at that story? Is it a threat or is it an opportunity for you?
Well, we don't have a position in shale oil. I would say we need all sources of production to meet future demand. Don't forget, at 100 million barrels, you have a decline rate of about between 3 and 5 million barrels a year that you need to compensate for. That is a natural decline. With shale oil, you need even much more than that. As shale oil pick up and percentage as part of the 100 million barrels increase, we need more than that for the decline. Because as you know, shale oil decline much more, especially in the first year. At the same time, there is a healthy demand. You're talking about between 1.3 and 1.5 million barrels a day. So if you add the two, you need approximately every year, in the average, 5 million barrels of additional capacity, either to meet the decline or for the additional demand. Shale oil is definitely brought quite addition over the last couple of years. But when we look at what's required over the long term, you need the shale oil, you need the conventional oil, and you need additional resources. Unfortunately, there is not enough investment that is currently going. There is a big drop in the investment, and we are concerned about the mid to long term in terms of availability of enough resources to meet global demand.
Amin Nasser, thank you very much for your time and your analysis and your thoughts, CEO of Saudi Aramco. And again, thank you for joining us on Bloomberg Television.
Thank you. Thank you.